Today, more data pushing rate cuts out as labour markets hold up again. Hello again, it's Martin North from Digital Finance Analytics, World Latest Post covering finance and property news. Well, Australian shares posted their first positive day in 7 sessions on Thursday, after Australia's jobless rate rose to 3.8% in March, which, by the way, was broadly in line with market expectations. And that's ahead of crucial March quarter inflation data, which comes out next Wednesday. The economy added 27,900 full-time roles, but lost 34,500 part-time roles in the month. Now, this is a very slight rise in the unemployment figure to 3.8%, compared with February's unexpected drop to 3.7%. And that shows it wasn't an aberration. After all, it's further evidence of the continued strong state of the Australian labour market. The data suggests a healthy and still tight labour market, said Sue Linong, chief economist at the Royal Bank of Canada. Despite sub-trend economic growth, the consumer recession, and subdued confidence, the labour market remains reasonably resilient. So you can forget rate cuts for now, as this can only make it harder for the Reserve Bank to consider any start to slide rates in the foreseeable future. Remember, Reserve Bank Governor Michele Bullock's mantra is that the path of interest rates will depend on the data. And this is one more data point indicating the resilience of the economy. Actually, despite record immigration, the employment-to-population ratio did fall marginally in the month, but it is still close to historically high levels that we saw last year. Now, this continues what I think to be a really wonky series on employment data, as I've discussed before. As in many economies, thanks to sampling issues and definitional issues, they are hard to read. Indeed, Australia's labour market report is at best a volatile series, and both economists and policymakers tend to look through the month-on-month fluctuations. So how good is the compass, I ask? And also, Thursday's data was widely anticipated following holiday season-affected readings from December onwards. The ABS noted that employment flows have now returned to a more usual pattern after recent instability. The incoming and outgoing samples this time around are certainly a little less volatile, but frankly, I still take the results with a truckload of salt. Indeed, other indicators like job listings are telling a different story. This data, via Justin Fabo from Antipodean Macro, shows that labour shortages are rapidly easing across Australia. Low-skilled positions in particular have become much easier to find, with the share of employers reporting recruitment difficulties falling to pre-pandemic levels. This does make sense in the light of the record surge in international students, with the latest Department of Home Affairs data showing that there were a record 713,000 student visa holders in Australia in February 2024. International students, of course, tend to work in low-skilled occupations like hospitality while studying. So given the latest surge in net overseas migration as reported by the ABS, labour supply should continue to grow at a robust pace. So all else being equal, unemployment should be on the rise, with around 40,000 additional jobs needed to be created each and every month to mop up the new migrants. For more on this, check out my recent live show with economist Leith van Onselen. But looking at the detail from the ABS, the Australian employment did unexpectedly fall in March as the jobless rate edged higher, reflecting restrictive monetary policy settings. The ABS said, with employment falling by around 7,000 people and the number of unemployed rising by 21,000 people, the unemployment rate rose to 3.8% seasonally adjusted. Actually, the economy shed 6,600 roles, which confounded expectations for a 10,000 job gain. And that followed an increase of over 100,000 in February. A level of below 4%, though, still indicates that the market is close to full capacity. As a result of the fall in employment and the pace of growth in the population, the seasonally adjusted employment to population ratio fell 0.2 percentage points to 64%, and the participation rate fell 0.1 percentage points to 66.6%. The labour market remains relatively tight in March, with an employment to population ratio and participation rate still close to their record highs back in November 2023. While they have both fallen by 0.4 percentage points since then, they continue to be much higher than their pre-pandemic levels, the ABS said. In other words, the employment to population ratio and participation rates are both near record highs. Now, a lot of this can be explained by people grabbing multiple jobs and a lot of part-time work still there, of course. That's because of the significant financial pressure on households. Now, there was a rise in hours worked by 0.9%, and the recovery in the growth in hours worked over the last 2 months has seen the annual growth rate rise to 1.7%. That's still weaker than the annual growth rate in employment of 2.4%, but that partially reflects the very high levels of hours worked a year ago, the ABS said, again reflecting the pressures on households. The seasonally adjusted underemployment rate fell 0.1 percentage points to 6.5% in March, while the underemployment rate has risen by 0.2 percentage points since March 2023. It remains 2.3 percentage points lower than March 2020. The underutilization rate, which combines the unemployment rate and the underemployment rate, remained at 10.3%. And while this was 0.5 percentage points higher than March 2023, it was still 3.6 percentage points lower than March 2020. Across the states, the unemployment rate was highest in Victoria and Queensland at 4.1%, and lowest in Western Australia at 3.4% and the ACT at 2.9%. And turning to the trend data, in March, the unemployment rate remained at 3.9% for the fifth month in a row, with trend employment up by 29,000 people, or 0.2%, and the hours worked remaining stable. The latest trend data shows that hours worked had fallen since the second half of 2023, but had changed little since December 2023. And more broadly, these jobs figures, together with quarterly inflation data due out next week, will help shape debate at the RBA's May 6th to 7th policy meeting after it held its key rate at a 12-year high of 4.35% last month. The RBA is being data dependent as it awaits further signals on the economy's trajectory. And while the job market does remain tight, Thursday's data showed that the annual growth did slow to 2.4% in March from 4% a year earlier. That slowdown is indeed in line with the RBA's expectations, having forecast the jobless rate to rise to 4.4% by the middle of 2025. The central bank will publish its quarterly update of forecasts in May. And the next release of its first quarterly CPI on Wednesday next week, with economists anticipating a weaker reading than the 4.1% for the final 3 months of 2023, suggests that there could be some wriggle room. But the RBA's latest estimates show inflation is only going to return to its 2 to 3% target in late 2025, reflecting expectations that the last stretch of bringing down prices will be the toughest. So there is little chance of rate cuts this year. And the ASX 30-day interbank cash rate futures for December is now sitting at 4.175%. So higher for longer as the economy ticks over. But of course, as I said before, the underlying data is questionable. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.